Ladies and gentlemen, welcome to Insurance Town. I'm the mayor, Heath Shearon, and the host of this podcast. Ladies and gentlemen, if you are looking for a way to improve your intake process in 2025, if you're looking to improve the prospect journey, the customer journey, anything that has to do with your customer experience, look no further than Canopy Connect. They've been with me since the jump. I love what they're doing over there, and they're just continuing to evolve. They're so much more than just a one-click solution to getting the deck pages. You can get those deck pages, yes, but now they have a whole intake form process where you can create and customize the journey that you want them to have. And it can be customized to your agency with your agency brand colors, your logos, your everything. Go check it out. Use canopy.com/Heath. Get a discount for being a listener of the show and get your demos, all of that set up right then and there. And check out the old nasty video that I did that is so cringy right now, but go check it out. Also, guys, my friends over at Smart Choice, they are so much more than just a network to get markets. They could do so much more. They want to partner up with you to help you to become a better agency, more than just getting markets. They want to help you to maximize the revenue in your agency. 10,000 agencies across the country trust them. $11 billion in premiums, so carriers love them. They have a great portfolio of E&S markets and carriers and MGAs they work with. They're just a one-stop, help for you. So make sure you go check them out, smartchoiceagent.com. Tell them the mayor sent you. Also, last but not least, it's not too late to begin planning, if you haven't already, those 2025 campaigns, the email campaigns, the direct mail pieces, all of that. Call my friends at Old School Marketing, OLDE, schoolmarketing.com. Tell Rusty what you want to do, and he will take care of you from end to end, whether it's handwritten, direct mail pieces, or if it's customized email campaigns, or just some digital help with your website, whatever it might be. Check them out. I'm going to slide out of the way here, ladies and gentlemen, so you can hear this wonderful conversation with my main man, Rob Haynie. Rob Haynie, what's going on, my brother?
I am freezing my butt off in South Florida today. It got down into the 50s.
Oh, my gosh. I
And you would have
understand
thought it was
completely.
going to snow 25 feet compared to what people were wearing this morning when I drove into work.
Yeah. I hear you. Being a man from Arkansas, we don't hardly get a lot of cold. So when it dips down in the 60s or the 50s, like, oh my gosh, it's cold. I got to put my sweater on and
Oh,
I
yeah.
got to
So
bundle up. And
I
so
won't.
actually,
I'm still wearing short sleeves, you can see.
there you go. Yeah. We finally had to turn our heat on for the first time. We always play the game of see how long we can go without turning the heat on. Sometimes we'll make it to like February before we do, but this year we made it to December. So
We get cold, and I live in Fort Lauderdale, and we have
yeah.
not turned the heat on yet. But I will tell you, and I'm going to comment to my wife last night, that I think this is the coldest December that I could actually November that rather, and into December. It's been in the 50s, probably 14 days of the last 20. So
Wow.
old for South Florida.
That is cold for South Florida. That's real cold. So no, I get it. So like I said, I had to button up my sweater a little bit there. But why don't you do me a favor, since we're already talking a little bit about where you're from and whatnot? Let's take a walk down memory lane and let's talk about who you are and what brought you up to today and where you're at now.
Very well. So my name is Rob Haynie. I'm the owner, one of the owners of Life Insurance Settlements Inc. My official title is managing director. And in 1993, I was in the gym, and a gentleman who I knew well, pretty good salesperson, was telling me that he had gotten a new job and he wanted me to try this out. And it was called viatical settlements. And I said, okay, you're going to have to help me out a little bit. What does that mean exactly? He said, well, that's when we help somebody who has got a terminal illness and we help them, he or she, sell their life insurance policy and use that cash to buy medicines and healthcare treatments, et cetera, and hope that they can turn things around. And I thought on my ride home, that's easily the most ghoulish thing I've ever heard of in my life. I said, I have no desire at all to do that. But as I sat at this traffic light, and I remember exactly where I was in Winter Park, Florida, I said, wait a minute. We're giving people money out of a life insurance policy that they can use the cash while they're alive. So in essence, putting life back into life insurance. I'm in. I told my wife, I
Yeah.
told my mother, both of those individuals thought I was literally insane job and go into a job. They literally had no idea what it was. And we're talking about industry product. Now, the people we worked with mostly were afflicted with HIV and AIDS. That was and if you've seen the movie The Dallas Buyers Club, you'll see a scene
Yeah.
where they're using the capital from a life insurance policy to buy medicine. Unfortunately, for the ones early on in my career in 93, 94, 95, 96, they typically, once you got AIDS, you died. If you remember the movie Philadelphia, you died.
Yep. Oh, yeah.
But as later on, they get the meds started, think people live a little bit longer. And then in 98, they came out with what they call the protease inhibitor cocktail. And that really, in essence, made AIDS no different than any other disease you fight with medicine. Diabetes comes to mind. So the business looked like it was over. It looked like I was going to be all done. Fortunately, a group out of Chicago, CNA and life insurance company, had opened up a subsidiary called Viaticus. And they had spent a lot of money educating people about HIV and AIDS and cancer and lung diseases, et cetera. And they started to think, what if we bumped up against mortality? What if the life expectancy was at the end of the spectrum and you got to a good certainty that there was absolutely going to be a death? It's really what the investors are looking for. So they started to buy life insurance policies on very old individuals. They no longer wanted them, no longer needed them, and in some cases couldn't afford them. And the life settlement market began around the turn of the century. That's when we started to, instead of deal with advertisements to individuals to call us, we were working through their intermediaries. We were educating financial planners, life insurance agents, estate planning attorneys, et cetera, and telling them if their client comes to them with a life insurance policy, before they do anything ridiculously stupid like surrender it or let it lapse, let's go see if someone will give you more money. And that's when this market took off. And back then, the longest life expectancy people were buying was about 6, maybe 8 years. And today it's well over 20 years.
Wow.
So that's where we are now. So the people that we're still educating those folks, we're still, going out there every day, really pounding the pavement to educate as many people as we can. But to really put it in perspective, our industry buys about $5 billion of death benefit a year. And we have backed into the numbers through the American Council of Life Insurers fact book, which tells us that about 112 billion lapses are surrendered for people the age of 65 in the United States of America every year. So we only sell 5 on top of that. So the education process, I blame myself and others, we've done a horrible job educating people. That's a staggering number to think.
Yeah, it is.
And people can use this money, and what people who are fortunate enough to either have advisors or see a commercial or read something on the internet that look into this can find themselves an average of getting 6.5 times more than surrender value. So if you have $100,000 of surrender value and $1 million life insurance policy, and you come to me, there's a chance you can get 6.5 times more, double,
Wow.
whatever. So the numbers are, and I was on a call before this, the Life Insurance Settlement Association I was on, I'm a board member of, and we were talking about just that. Long-term care is the number one issue facing seniors today. The concern about living too long, where will they live? People want to age in place. It used to be in vogue to go to these fancy smancy, retirement communities and then step on up all the way up through hospice. Well, they're increasing almost 8 times per year, 8% a year. So people can't do that. It's like being the cop down here. So long-term care is also very difficult to get if you didn't buy it early enough. It doesn't cover everything you want it to cover. So most people, the trend today is to take the home that mom and dad lived in, and let's make that assisted living facility, if you will. Let's widen the doors. Let's put the ramp in. Let's get the bathtubs, et cetera. Let's move from the downstairs to the, and you keep the home, you keep the equity in the home, the value of the home continues to increase, and everybody stays there. And there's studies that show mom and dad live longer. So that's one of the directions we go. But all we're really trying to do is empower people to use money inside of a life insurance policy that they've paid for all these years. And the reasons that you and I may buy a life insurance policy when we're 35 or 40, those reasons are no longer around when we're 65 or 70. The kids are gone, the house is paid for. So why do I have this life insurance policy? If it's not part of a complex financial plan and tax savings on transfer the ownership of the money, if you will, to the children, then you're just paying John Hancock to run another commercial, put a sign in center field somewhere. So that's what we teach people. But people do not know that there's an option. So that's why I talk to people like yourself and say, Heath, do you know anybody that has a life insurance policy they don't need, or can't afford? And before they do anything, call me. And the beauty of it is it's a free non-binding appraisal. If I get them twice as much as they ever thought they would get, and for whatever reason, that made the policy more valuable to them and they want to keep it, that's fine. It's their right to do that. But generally speaking, most people have a wish list. They have a punch list. Some people like to give money and put into their grandkids' college accounts, see it take place while they're alive, makes them feel better about themselves. Some people donate money to 501c3s while they're alive and see their name go up on a building. So it depends on what their wants and needs are. There's others, quite frankly, that will go buy a Ferrari, but that's
Right.
their money.
100%. And that's, one of those things for people going back to the, the long-term care thing. You hear so many people now, even in my own case of, don't put me in a home, don't put me here. I want to be right here. And even in my own family, we purchased a home for, mother-in-law, get it out of her name because the whole government thing there and all the regulations there that, she can't have so many things in her name and all this stuff. So I get that. And then, my first question I would ask you, channeling the audience here, when you're talking about buying life insurance policies, are you talking simply whole life policies, universal, or term policies as well?
Question. All of them. So a
term policies as
term
well.
works because a term will expire and you can renew it. And then when you get to be about 70, you'll have to convert it, but you can convert it to a permanent policy. The reason those are attractive right now to buyers is a couple of things at play. One, it's going to be a longer life expectancy usually, so they're going to buy it for less money. But the client who's selling it for the little bit of money is the other option was nothing. So of course they're going to take a little bit of money.
So the flip side, the buyers of these policies, what's their gain in getting? Like, why are they buying these policies?
Okay, so think of an investor that buys almost anything. These are like investors. This is called an alternative asset, and this is a longevity product.
Yeah.
So take the reason why life expectancies have gone out in our marketplace is because the type of buyer has changed at this end of the spectrum. So think of a pension fund. The pension fund buys life insurance policies on hundreds or thousands of people. And they all say you're going to have to pay these premiums for 20 years, but at the end of that, your return will be an IRR of 10%. We'll just make that number up. That's fine because a pension fund's liquidity needs are usually so far off over the horizon that they don't need the money. So it's a perfect thing for them to buy. The other reason they like it, it's uncorrelated. So if you turn on the TV one day and you got to turn it sideways to make the market look like it's going up and everything's going on in a handbasket, the life settlement assets, the insurance assets, they're stable because the death benefit stays the death benefit, the premiums stay the premiums, and the life expectancy stays the life expectancy. Of course, unless you're one of those sophisticated investors that bought a lot of those stocks that's going the other way. But generally speaking, stable. So they like it. Now here's the upside for the investor. When they buy someone who's healthy, maybe in their mid 60s.
Yeah.
Okay, and that person has a health change. So that person's very healthy and now there's a problem. And the life expectancy that once was 20 years is now 12. They can sell that policy to another buyer in this class on the tertiary market, and they're out and they make money along the way. Nobody died. The client is still moving on with life, but the asset is transferred to someone else. No different than your mortgage. When you buy your mortgage and you close on your house and your home, the bank that you signed for is no longer the people that are collecting your mortgage. They've already sold it, sometimes twice before you get your first mortgage payment. Similar thing here. So these are all sophisticated capital. The days of when this business first started, it was individual investors buying whole policies that maybe could or couldn't afford it. These are different because if you think of the bell curve, everybody's life expectancy is, here on the bell curve, and they're going to all pass away here. That's the thinking. In reality, we know people are going to die soon. You could buy a 20-year life expectancy, and the guy could find out about pickleball in 3 weeks when he goes home for Christmas with his friends and have a heart attack. It can happen. If you bought that guy's life insurance policy, you get the whole death benefit right then and there. You do.
So, I mean, I guess that goes into place like when I first started learning and getting licensed in life insurance years ago, I always thought that there was this thing for beneficiaries and tertiary beneficiaries and secondary beneficiaries. You had to have some sort of like
You do.
relation to, or
Oh
you
no,
had to have,
so when you're talking about when you take out the insurance, you have
but
to
well, yeah, but when you buy it, don't you still like, I always thought that you had to have some sort of like relation to the person to be a beneficiary or have some sort of,
to take it out initially, you do. That's the
but when
thing.
you sell it, you don't.
No, they can sell it to anybody. So
So
there's a
if,
1911 Oliver Wendell Holmes Supreme Court decision that made all the characteristics of life insurance the characteristics of real property. So you can sell them. That's why you'll
okay,
see like mortgage companies will say you have to have a life insurance policy in order to get this insurance policy, so make sure if something happens to you, there's something that's going to take care of the mortgage in in your absence. So those
okay,
are there. So yes, you can do it. It's complete. So that's a great question. Next thing for your audience to understand, we are regulated in 45 of states plus Puerto Rico. 5 states that we're not regulated in don't have regulation. They don't regulate it. But we act as if they do. So the paperwork that works in all the states that's regulated is the same NAIC and COIL forms we use in those states. Client is protected, as is the investor in this transaction, because nobody gets anything until the change takes place at the carrier and the beneficiary sign off. They will know that mom and dad is selling a life insurance policy, and they have every right to take over the premium payments, but they don't. But they sign
okay.
off the rights, and then mom and dad sell the policy, and there's an escrow agent that sits in between both. And once that transaction is complete, the ownership goes to the new entity and the money is distributed to the client. Client has 15 days to sit there and decide if this is something they wanted to do. So we don't have
After they, okay.
correct. Similar to a
So,
timeshare,
okay.
cooling off period.
Okay, so life insurance is such like a deeply personal and sensitive topic. How do you have that conversation to gain trust with these clients to get them to make these difficult decisions
So
to sell their policy?
mostly we're dealing with somebody who's along for the ride with them. So it's their advisor that they trust and they've been working with forever. In the case of what I call a typical life settlement, when it's a consumer direct, they're unfortunately in a situation where they're just finding out about this. Many times they're down to the last couple of months, a couple of weeks, months of payments they can afford to make, and they're just happy they found out they could sell it. So the difference between me, who is not a buyer, and a buyer is I work for the client. I go out to the client on behalf of the client to all the licensed entities that are in this business, and I make them bid against each other. I don't put a timeline on the bid. I don't have any rules other than make the bids until you can make no bids no more. And then the client can ultimately decide if they want to take the policy, sell the policy or not. It's the reason they sell it is their options are I've got a $500,000 policy and I've got $32,000 in cash surrender value. That's all I'm going to get. And I call them back and say, here's $116,000. No longer a hard decision. They're taking 116,
Yeah.
policy transferred, and they use that money for whatever they deem is necessary for them.
Yeah. And at that point, if they just need enough for the burial, then they've still got quite a bit left over that they could still help their family. They could still, pay off any debt they need to. They could still do a lot with that.
Sure. Yeah,
Um,
that's the thing. So you can always, with the life insurance policy, there's always options. Forget my business. So you can
yeah.
borrow money against a life insurance policy.
Yep.
Interest rate will be that of a credit card. So you'll be paying about 25% interest on that usually. And you'll need to repay that. And if you don't, that amount times interest comes off the death benefit when you pass away. So that's one option. People can take advantage of that, and that's fine. But typically we're exceeding that. So my industry association,
Yeah.
I mentioned earlier, Life Insurance Settlement Association, I've been on the board. 20 of the 30 years has been in existence.
And you just to say this, you just recently won like a major award
I did. Well, I
through
won
the
a,
lease.
correct. That's right. I won the leadership award because I was famously
Congrats.
told, thank you. I was famously told by a friend of mine that that he said Haynie is a people pusher. And I'm at the table and I don't even know what he's even talking about. And he says, I've been watching you for years and you tend to suggest something and then kind of push people towards that. And the fact of the matter is, I do, because you've seen that commercial, Super Bowl commercial years ago, the herding of the cats. That's
Yeah,
sometimes what these big associations are like. They're all too many cooks, not enough, too many cooks in the kitchen. They're just going into, so you have to kind of make it seem like it's their idea. So
sure.
that's what I do. So we are trying to do things like, um, this is a great story, actually. We had a bill before Congress that had bipartisan support for what's called a senior health planning account. And what
Okay.
that did was that said to the person who sells their life insurance policy, you can take the proceeds and put that into a senior health planning account and use those monies for healthcare related expenses. And between you and I, that is a book about that thick of what qualifies. It's anything. Um, and as long as it's in there and you spend it out of there for these items that are approved, you won't pay any taxes on the money that you would owe taxes on a life settlement. And we had no opposition except we have one, COVID. COVID hit, literally,
Yeah.
and that
Wow.
ended it. So now we're bringing it back because it still has no opposition. We're using it as we're working with some senators who will remain nameless, but famous older senators who understand the pressing need of long-term care. That we are not only about to have a crisis, we are in the crisis. Crisis is now. You can't get into these homes. I had a guy at a speech. It was unfortunately horrible to hear him say this, but in reality, very true, which was if you don't have enough money to go into a assisted living community that you can afford, you're better off taking a gun unloaded into a 7-Eleven and getting arrested for robbery because there you'll go to jail. And in jail or prison, they will keep you alive. I can't say so much for a state-run senior health clinic because that's actually state-run. These prisons are privatized. They're paid to keep you alive. And that's the scary thought to think that people live their whole life, work so hard, and then they've been priced out of what used to be a given when we were kids. People in my town, I lived in southern New Jersey, and when people got old, they went to Crest Haven. It was called Crest Haven. Was lovely. People would go out and visit their grandparents. Everybody was in there. It was like being in your little town square. Not anymore. No one can afford to go there. It's half empty. It's too expensive.
Yeah.
So that's the crisis. So we're trying to teach people that, you can take some control with life insurance policy, and let's go find out what it's worth. Let's get that free non-binding appraisal, and let's say, okay, now that we know the answer, you can surrender it for X, you can sell it for Y, you can take a loan. You got it all on the table. What's best for you? And that brings me to my next point. Now we've decided, our industry got inventive. They said, what if you need insurance but don't have the money to pay for it? So you can't go buy new insurance because you've got a lot of problems, you're older. So what if we take an existing life insurance policy, use $1 million policy as an example, and we say, okay, we're going to sell your policy for, you're going to get $10,000 in cash, and then we're going to put you as what's called a retained death benefit, and we're going to record you for 20% of the death benefit at the carrier level. So now for the next, we'll make you going to live 7.5 more years. For 7.5 more years, that insurance just sits there. And then when you pass away, 200 grand goes to your named beneficiary. You've never had to pay for that.
Wow.
So that makes people comfortable with the fact is they're going to protect they're still going to, the original need for
Sure.
insurance was protection, and now that's going to be there. It's not going to be quite what it once was, but $200,000 is a lot of money.
100%. You're exactly right. And then, the guy who purchased it still gets the 800
Yeah, he factored that
and
200 in there. He knew that. He knew the cost of it. That's the difference between
100%,
getting an
but
offer.
still.
People
Yeah.
sometimes don't trust themselves. They'll be like, you know what? I don't want $300,000 because I'll go to the horse track, or they just don't trust themselves. They don't want that money in their possession. They want to keep it. They want to segregate it. And this gives those clients that possibility that they have that.
Yeah. Well, the other thing I was thinking about, and again, tell me if I'm wrong, I can edit this out. It's my show, but like I've seen a big rise and uptick lately in, the annuity market now, and that's starting to come back up. Are you seeing that affect your industry and people taking some of that settlement money and putting that into an
Oh,
annuity, or
100%. That's 100% that's what they're doing prior. That's astute on you to figure that out, but that's what they do is they go, I need income. I don't need death benefit anymore. I need
right?
money. So
Sure.
imagine if you sold and we've had cases like this. This is giving a big example. So a $10 million policy, guy sells it for like almost 4 million bucks. It's a lot of
Yeah,
money. You know what he buys?
sure it is.
A SPIA, dumps all 4 million into the policy and starts paying out money. So he does two things. He doesn't trust himself with the money. Well, he doesn't have it anymore. And he's going to pay himself out every month a large sum of money, which is going to keep his standard of living exactly where he needs it to be. That's what people do. So annuities are great. Now, guess what that also benefited? His agent.
Sure it is,
And he
because then
gets
they're getting
sold.
that commission.
You got it. Everybody won.
And that the commissions on those annuities are great.
Unbelievable. If you
And
shop them,
if he
they're really good.
continues, yeah, and if you continue to add to that, then that agent's going to continue to get, more and
Takes the
more.
money. If he doesn't need the money, the excess money, he dumps back in the annuity, makes the payment bigger next month, or they can defer it. You want to open up possibilities where you didn't have them before. So annuity is absolutely one thing they do. That was the most popular thing. I guess I started off earlier by saying long-term care has caught it. That's the big concern. I mean, there was an article 2 days ago, Monday, um, that talked about all these big nursing homes are going out of business because people don't want to stay in them because they can't afford them and they want to stay in their house. They don't want to live in some new place and walk around with a bunch of people. People are germaphobes. They don't want to be there. The guy says, I don't want to. I went to one guy's quote. He says, I felt like I was on a cruise, but the boat wasn't moving. And he
Yeah.
said, and he said, and the alcohol wasn't free. So he's like,
Yeah,
I want to go home where the alcohol's free. And the guy says, well, don't you buy the alcohol? He says, it doesn't matter. It's my alcohol. That alcohol is someone else's. He goes, so it's just the, personal choice for people, flexibility. You can do a little bit of both. There are some uh, long-term care plans out there that are hybrids of annuities and things that are always getting inventive of how they can do both. But the scary thing in long-term care has been what they sell you, almost like when you buy health insurance as a young person. What they tell you you're covered, and in reality, what you're covered are two different things. So
right.
memory care is the one that has really crept up on people. The cost of that's so high. And there was a doctor last week. I was on a podcast with two people, and the doctor was one of them. And he goes, do you know when people know when they have problems with their brain and their memory? And the guy says, I don't know when. He goes, when they walk in my office and say, do I have a problem with my brain and my memory? Because that's the exact time they know. And he goes, and that's exactly right. Because nobody knows your brain better than yourself. So you
Yeah,
just don't have something and not know it. When you take that next step to the doctor, and he goes, and unfortunately, as funny as that was to you and I to laugh, and it was in that show, the same thing, it's too late.
sure.
There's things you can do to stave it off.
Well,
Uh,
and that brings me to another question really quick. You know, as you've talked about and mentioned, the life expectancy, the table was extended, when I first started selling life insurance, I think it was like 68 or for men or 64, whatever. Now I'm seeing like my father's 82, still selling life insurance to this day, or 81, I should say. But, as people, is there a certain age that you cannot buy these policies from them anymore?
okay, so the answer is no, but so we work
Or
two.
where you typically stop?
We tell people that you should be, when you're 60s, don't do anything, call us, even if we tell you that it's not going to work, just make sure we're going to say that to you. And that's number one. So when people get to be older, this just makes somebody who's 90 and the policy matures at 100. Okay, so now they go out to 120, but this one is 100.
Right.
And the person has got a 4-year life expectancy and he's 92. There's a
Yeah.
buyer for that in our marketplace. There's a lot that will pass because the the tail risk is such that if he lives so long, he goes past 100, it's worthless. That's, but you get a lot of money, but at the end of the day is if you don't need the money, you're better off making the premium payments because the premium payments are going to give your estate the full benefit. And then you'll have the guy or the girl go, I don't care about my kids. I want the money now. I want to go.
My kids are doing well. They're in a
Yeah,
good
my kid's
place.
92 and you know that 92-year-old, they can still do things. They want to go on that cruise. They're doing it. The hell with everything else. They're going and they want the money to do it and they sell their policy. Or they break a policy in two. They might have a $500 policy. They become 250s. They keep 250. They sell 250. But they have
Sure,
that.
or find a situation like you mentioned earlier where they get to keep part of it for a year or two. And so the other flip side of that is how young is too young?
There isn't, so that's another question. There's no such. So if you are 42 years old and you have terminal brain cancer, you're not too young. The question
Sure.
is then, why are you selling your policy? Because you've got a life expectancy, let's make it up, 6 months. We do not think you should sell your policy. And their answer may be, I don't have any money to pay the premiums. I need the money to go try and save my life in Houston, Texas, and get this treatment that's exotic.
100%.
Whatever the reasons are, that's their reasons, you do it. So we tell people that are what called, so a viatical settlement is where I started, and this business is still, it's still there. It's just a life expectancy defined by a doctor of having a reasonable illness or condition to result in death in 24 months or less. Doesn't mean that they have to, they might not. But that's considered viatical settlement. We tell people all the time not to sell their policies. But generally speaking, they're in control, we're not. So they will sometimes sell a policy against our wishes, and it's just, they just want the money. They want it. We've been, when I was in the AIDS days, there was an older gentleman who was able to pay for, I don't know the exact number, but it was a lot. We all lived in Orlando at the time. I think he picked close to 50 people. He flew them into Disney World for like a week, put them all up in the same room, same part of the hotel, and they did all the things. They were together for 1 week, and that was the memory that everybody in that family took from him with the life insurance policy. He was an attorney from California, but that was what he was able to do with his own money. And that's the beauty of this is everyone has their own reason. You know, every deal's a snowflake. They're all different. In that particular case, those kids, we had Christmas cards from him for like 3 or 4 years till he passed away. And he was like, he'll never forget it. As a matter of fact, the Christmas card was every time was a picture of the family doing something at Disney World. And that was, you know, they would never be able to afford that otherwise. And so that was us, in essence, what I like to say, putting life back into life insurance. Because life insurance is death. You got to die for it to work. So we want to give it to you while you're alive.
Yeah, I love that. You know, and I remember when I was, I don't know, 16, 17, 18 years old, I can't remember. I was young and I had my first, you know, totaled vehicle. And I remember, you know, I had to have been after 18. Never mind. I had to have been in my 20s. My bad. So I was in my 20s. I remember my dad telling me, hey, you got a life insurance policy, a whole life policy with these benefits in there. Won't you take some cash out of it and you could buy yourself a new car? Because he wasn't going to give me any money. You know, he was like, you need to do this on your. So,
real dad.
Again, what?
He was a real dad.
Yeah. And so he just said, hey, you could take up to, you know, $5 or $6 grand out if you want to, and you could put a good down payment on a new vehicle and do this that way. And I was like, really? I always thought it was just for when you die. And then as I got licensed and started learning more and seeing that there's benefits now for, you know, cancer and heart attacks and this, that, and the other. But, you know, that being said, as far as, you know, my audience concerned, you're concerned, you know, as you're talking through some of this, obviously you got an audience of people listening. They're familiar with life insurance. You know, there's probably some life insurance agents on here, PNC agents on here. You know, there's, you know, some financial planners on here and whatnot. What would, you know, what would be your, you know, communication that, what would you want them to, you know, walk away from this podcast knowing, like, besides just that this is out there? But
you're a great question. So ask questions, right? Just like you did to me, I'm asking again. Ask them questions, you know, when they're always looking. I tell people that have access to the client's financial assets to do a policy review, to do a review of all their assets, mainly to make sure you get the life insurance policy, because when you're looking for a life settlement, you may not even find a life settlement. You may find an opportunity to sell them an annuity. Something they're lacking. They have too much of it. One of the valuable lessons one of my agents told me, which I've shared with people and I'll share with your audience, is when you're working with a client and the client is 2 or 3 years old in your business, and he bought some life insurance from you and some other things. Always ask him, does he own any other life insurance? Because they don't. And if they do, secure that as asset under your control, get that change of carrier at the carrier level as to who the broker of record is, and now you've got all their assets underneath your umbrella and you're reviewing all of them. And you come to find out that they've had another $300,000 of life insurance that somebody sold them that is not performing as illustrated, that cost them 3 times more than they were told it was going to cost. And they're continuing to pay it because no one's paying attention to it. They're just writing a check. And he says, let's get out of that right now. They could be in their 40s. Doesn't mean they're going to do a settlement. Get out of that and let's get into something we need to get into. That's good money after bad. So those are things I think are valuable. Is to always ask questions. If the client is working with you and likes you, they're going to want you to be in charge of the other life insurance policy they may have bought 10 years ago from an agent that's no longer even in the business. I mean, that's the thing about most life insurance agents.
Sure.
Most policies are orphaned. There's no agent. So there's nobody in control.
Right. That dad works orphan accounts all the time still to this day. But for the audience listening, is this something that any PNC or life insurance or anybody in the industry can get into, or is it something they should call you and your team, or is this kind of
they call me?
Yeah. Is that something that, I mean, I'm sure it's a very difficult thing. Like you've honed this craft the last 30 years. So you wouldn't probably suggest that, Joe Blow insurance agent or John Doe insurance agent jump into this. Is there a benefit to reaching out to life in, your company?
Life insurance settlements? Absolutely. So here's what happens. So anybody
Excuse me for the bluntness. I just didn't know how to ask the question.
No, that's a good question. That's good, but it's a great question because can people go it alone? The answer is absolutely. Okay. But the answer I tried to explain a little earlier in the presentation, in the interview, I should say, is we know what we're doing. We know where the money is. We know the games that people are going to play. It's just like real estate. We gave the home example. If your house is listed for $1 million and it's really worth $950, you have no interest in selling your house for $700. Just as I, as a buyer, have no interest in giving you $1.6 million. So you got to work within that time frame. So you got to know what it's worth, right? If you're just out there taking offers because someone gave you one and it's more than cash surrender value, and you think, wow, that's it, and you only went with one player, that is not the best offer. And that's not to say that if that's the only choice you had and you make the decision, it's better than the other option, which was to let it lapse or surrender it for cash value much lower than the offer. But what I do is I go out as your representative to the market and I get you the highest offer. Here's the best part. When I get the highest offer, the amount of commission that I make, and if I had an agent that was representing the client, that we make is disclosed in the contract. And if that number is not high enough in your mind and you want to give us more, you can go ahead and do that. However, that has not happened ever. So if it's too high and you think we should make less, that's the negotiation tactic that you have over us. But the reality remains, when you buy life insurance, and you know this better than anybody, they have no idea how much commission you make.
Right.
None. So we've made Michael Friedman again said the most transparent financial services transaction you can do in America today is a life settlement, because everything's on the table. The client knows what you're making.
Yep.
Guess what? If you're going to make $300,000 on a death benefit, on a life settlement, and people think, oh, that's too much. Well, if you got them 1.7 million and they were getting ready to surrender for $205,000, they're not upset about $300,000. As a matter of fact, they know you've earned it. So those are in there. There's a way we calculate that fee. But the bottom line is, I will guarantee you that when we're done, the highest offer you're looking at is the highest offer you can get.
And the agent or the financial planner or whatever that referred you that business or that called you on that is going to get their cut too. So it's a win win
100%. They're
win
going to get
win
more. They're going
win.
to make more than I do, and that's because we want to incentivize them to find the business. So we're not in
Sure.
here saying I'm making 800,000 or 80,000. You're making five. It's more like you're making 60 and I'm making 40. That type of arrangement. And
Yeah.
that's
So they definitely need to be reaching out to you then.
yeah, yeah. I mean, at the
So
end of the day, I think it's the best piece of advice.
yeah, sounds like it. If they want to go it alone, like you said, they can, but you
Absolutely.
guys have been doing this for 30 years. So what's one thing about the life insurance settlement market? Like one way that it's perceived, if there's one way it was perceived, what would that be?
So in the beginning, it was perceived as that ick factor that I talked about in that gym
Right.
conversation. There was like, oh, it's ghoulish, et cetera. There was always this, and I'll just say it because people say it all the time. Well, what if you sell your policy to this investor and tomorrow they shoot you? Right? Well, number one, Barney Fife, for all the Mayberry fans out there, could solve that by lunch because the person that would be shooting you would just have become the owner of the life insurance policy. So they would
Yep.
solve that in 3 seconds. So that doesn't happen. Number two, if that's true, then you would never buy an annuity because John Hancock's CEO would run you over the next day. I mean that ridiculous idea. But trust me, we don't put that out into the world. The carriers do. Life insurance
Sure.
companies do not like our business because God forbid they have to pay a claim. They're interested in writing insurance like a machine and then having people lapse or surrender policies. So I
Now,
tell people this is kind of something for thought. 2008 financial crisis. Remember they handed out all the money to the banks, TARP money?
mhm,
Yeah. Did they hand out any to any insurance companies?
no.
Why not? Why were they so financially stable in a worldwide economic meltdown? Because they keep nine at every $10 you give. And
Yeah,
that's the one and give you the one back and make two off of the one. So they are making money hand over fist. They don't make any
100%.
money. So that's why we think, and I'll say this now for my life insurance uh, executives on the call on the podcast. Um, that's one of the reasons you should buy life insurance. If you talked about it in the upfront sales presentation, you mentioned the accelerated death benefit, which was born out of the viatical settlement industry. That didn't exist until I existed. Now you can say to somebody the same thing as relates to the insurance and the insurance policy, the value that it has um, intrinsically for the seller, that this is an asset that has been hidden on purpose from view. You do never think of this as something that has any money inside of it, other than, to your point, whole life and universal life, where you've been overpaying the premium to create this account of money that's built up that's yours. There's a famous saying of buy term, invest the rest.
Right.
That's what I own. I own term. And then I'll eventually have to force myself to buy permanent product when I get older. But at the end of the day, this allows people the flexibility to find out what it's worth and then make the best decision for them. We have people that get the money and the offer, I should say, and literally say, you have just made my life insurance much more valuable in my own eyes, and they keep it. And that's their
Yeah.
life. They may revisit this 3 years from now, but they really feel like their life insurance had value, whereas before it was just a waste of money, and we made it real for them. Now, did we make any money on that sale? Absolutely not. But guess what we did? We made a referral source. She told everybody she knew.
Sure. And then 3 years from now, they may be back in the same boat and they'll call you
Could
back.
be. Yeah, could be.
So, if you could change any of those things, what was one of the things you would change about the way it's perceived, the life insurance settlement market?
Hmm, that's a good. There's not a lot, honestly, because it was an uphill battle. I'm proud of the journey myself that I've been on and that other people, my colleagues in my space have been into. It's an educational battle. It's something that, if I could change anything, I'd like all the insurance companies to wake up and realize they should allow us to do it. So when you are a New York Life agent Northwestern Mutual Agent, State Farm, Nationwide, you are not allowed to talk about life settlements to anybody.
Yeah.
So if you call up and say, that's also the same in the broker-dealer world. There's broker-dealers who do not allow any of their RAs to talk about it. That, in my mind's eye, is criminal. But because they're the life insurance industry and we're the life settlement industry, we are absolutely David, and they are 25 Goliaths. They rule.
Yeah.
So last June the 30th, at 5:30 p.m., I'm on the beach in southern New Jersey, and I get an alert on my phone that I can sort of see, and I open it up, and it's FINRA. It says, "What you should know about life settlements." And I thought to
Yeah.
myself, why would FINRA at 5:30 on July, when they know nobody's working and is on vacation, send out this to cover their rear end memorandum? And it was because one of their broker-dealer members had an agent. This member rolled out settlements. They were actually saying settlements or something you should do, but the agent decided one for him.
Yeah.
Let the girl lapse her policy. Woman. And then she saw a commercial on TV, called and found out she could have gotten 1.4 million instead of $118,000. And they sued the bejesus out of them.
Right.
And then all of a sudden this memorandum popped up. I knew this because I'm part of this organization.
Yeah.
You didn't. And here's the funny thing: the broker dealer did everything right.
Right.
They did everything right. The agents just thought, "Oh, I've done this in my head. This isn't going to work. Forget about it." And so now the E&O kicked in, paid everyone off. The agent's no longer with the RIA is no longer with the broker dealer, and the broker dealer didn't make that subsequent sale that I'm sure she would have made with $1.4 million. So that's
Mm.
what just blows my mind. So that's what I would change. I would
Yeah.
change the perception of, you should be talking about something that if you claim you're a fiduciary, which they all do, then
Yeah.
act like it. Act like it. They can't. Oh, we've never heard of life settlements. I said, do you take continuing education? They go, yeah. I said, okay, so there's at least 4 questions on every continuing education about life settlements. So either
Yeah.
paying someone to take it or you're taking it. Which is it?
Or you're not paying attention. Yeah.
Yeah, you're not paying attention. Or it's one of those things. But anyway, it's
No, I get what you're saying. Yeah.
it's tough.
So
But let me tell you what the best thing is, just to make you feel better, Heath. Talking to guys like you, having a conversation like we're having right now, is exactly what this industry needs. Totally needs, because these are people that can, at their leisure, listen to it, whether it's live or tomorrow night or next Saturday, and get this information and and use the information however they want to use it. One person at a time. I can send a million emails out and nothing happens, right? They just delete, which I do, by the way. You send me an email and I don't know who you are, it's gone. I don't look at it. Uh, but when you can, if they like you and the way you speak and how comfortable they are, and they feel like you're like their best, which I feel, by the way, like you're my best friend. That's that's they get information that way and they absorb it and then they use it.
yeah. So if you could summarize your philosophy on life insurance settlements in one sentence, what would it be?
Uh, so I used to say, we're here today for your tomorrow.
There you go. It's a good little elevator pitch
Yeah.
kind of thing. I like that. Um, so man, I could keep going on this forever. I gotta go pick up the kids here in a minute. But man, I really appreciate this conversation. I'm glad
Oh,
we
my
finally
pleasure.
got it done. We've been communicating for a long time about it, but
Yeah, that's why I
finally,
say you're my old friend.
that's right. We've been doing this a little bit now, trying to get this going. So I'm so glad that we could do this. And what I would say to you, audience listening, this is an opportunity you might have. Reach out to Rob, or maybe you're one of these gentlemen that are in their 60s, 70s, and you're thinking about what's next for you. Your kids are set up, your grandkids are set up, you're looking okay. Maybe you might want to call Rob and discuss this yourself and
Yeah,
what the
peace of
options might
mind.
be.
Peace of mind. Just find out. Someone says good, you try, but don't be that person that didn't call and find out, like that woman in that example, who relied upon the advice of her agent and found out she was sitting on another $1.3 million.
Yep.
A lot.
So And those that are listening to this that, may not, or may be hesitant or may not, quite understand or may not agree with some of that, to each their own. And I understand that. And I hope that, you'll listen to this back again and maybe you'll have your mind changed later and who knows. But Rob, I appreciate you sharing your heart on this and your philosophies on this and your thoughts. What's the best way for people to get in touch with you? What's the best way for them to find out more about your company? Why don't you take that runway for a minute and then we'll sign out.
Sure. So our website is www.lisettlements.com. My email is rob@lisettlements.com. And my cell phone is 954-599-4433. Feel free to call me anytime, day or night. Please leave a message. And if I don't answer, as always, I'll get back to you as soon as I can.
Dude, simple and easy. And that's a great phone number. Like, easy to remember, too.
Well, it has to be for me.
Well, brother, again, thank you so much. I look forward to talking to you. Yeah, brother. Thank you.
All right, man. Have a good day.